Good evening, everyone. I am CM Manmohan Modi, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing CP Committee of ICI. It is my pleasure to be a moderator for the 67th webinar on Labor Codes 2025 and Intricacies in Compulsion Cess after GST 2.0 reforms. In a short while, we will start this webinar. First, I would like to appraise you about the CP committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICI continuously aims at developing knowledge edge so that the members stand out to the expectations of the society. To achieve this objective, the CP Committee of ICI has been continuously striving for perfection, integrity, and knowledge, which make the word chartered accountant synonymous with excellence in service. In this direction, CP Committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. The program for this evening is as follows. We have two sessions of 1 hour each, and topics are Labor Codes 2025, role of CAs, intricacies in compensation cess after GST 2.0 reforms. Our eminent speakers will talk about above mentioned two emerging areas of professional interest. Now, I would like to introduce our chairman, sir.
Thank you, Manmohan. Please, है ना? No need of introduction. My dear friend and brother, vice chairman of the committee, my dear Vishnu Bhai from Mumbai, so dynamic, so young, and so diversified. My brother, and I to whom I believe that he is the person who is imparting his expertise and knowledge on all subjects throughout the country. He hails from Hyderabad, Premnath Degalaji, and my younger brother to whom I met one time with Mr. Chug. I remember Mr. Chug is also here today at some hotel entrance. And I requested him to Siva that kindly address some time to our audience on AI. I'm really surprised that you are also addressing on the GST. So something great, and you can also deliver today how AI can help in GST, right, my dear brother? And Premnath is also expert of the AI, and he's going to take to the labor reforms which have recently come. And that's why I appreciate Degalaji that he is the person who can learn and thereafter impart the education to all. So really great. And my dear friends who in a very large number attending this webinar, at the very outset, let me welcome each one of you and pay my heartiest gratitudes for attending these webinars arranged by the CP committee. Sir, I have today with me my brother Chuk sir also, who has come here in Jaipur to address some very good program on the academic excellence run by the Board of Studies Academics. So, friends, I would like to just brief two, three things. Today's topics speak that we are committed to impart education with quality and availability. At CP committee, we have decided this year that we will reach to the last member who is residing in the remotest corner of the country. And at CP, we are working hard that how we can reach to that particular member. So we are opening as many as chapters, as many as circles, and as many as the groups. And the committee under the leadership of Ginni Devi Goyal is working hard. And I hope that under her dynamic leadership, we will work together. And definitely, CP will reach to the newer heights. Vishnu Bhai, he is कहने को vice chairman, but he's really a chairman. And he's a leadership quality. And I think under his dynamic leadership, this group is going to uh, leap and bounce and would give great momentum. So, friends, just to few things about CP committee, I told quality and the availability were our main focus area, and we are delivering to that particular. As it is 67th webinar, I think, 67th webinar today, and we will arrange minimum 100 webinars this year on the platform CP, covering not only GST or the tax, covering AI, covering technology, covering that newer opportunity in MSME, covering that opportunity in foreign countries, covering in specific industry specific opportunity. So in each and every area we are trying to cover, and so our members can be benefited. Few things about the Udin. Udin, we have taken three important decisions this year. Number one was that no member would be eligible to generate Udin after 60 tax audits. Second, that member can know the name of succeeding auditor in case of tax audit or other audits if he is not aware about the succeeding auditor. Third, that member has to fill certain remarks about the quality of the audit, whether he has qualified, whether he has given adverse opinion, or whether he has given some disclaimer, etc. Just to have a research idea that how many reports have been qualified, etc. So at the time of need, we can present before the government. So with these things, friends, I don't want to speak much today because today we have a session, important session with Chuksa. So we will take definitely that session. So now the mic goes to Vishnu Bhai. Before that, the moderator Manmohanji for his introduction. And don't leave him. He is the person to whom we should introduce very dynamically. Manmohan
Sir,
Bhai.
sir,
Over to Manmohan Bhai.
before I request Chuk Sab to say few words for CP committee, sir.
Yeah,
Please, Chuksa.
thank you,
Please,
Vishnu
Chuksa.
bhai, thank you, Satish bhai.
Good
I
afternoon.
really, hi Gini. I really appreciate the way this CP committee during this year, the not limiting to the quantity but quality wise also. In the parameters, if we talk about the labor laws, in a few days' time, rather not even gone a week, this program is there with the members, with the best of the speakers. I really appreciate under the able leadership of our Satish Bhai and the Vishnu Bhai, and with duly support from the Secretariat Guinea also, these kind of programs with the best of the speakers around. Same way, if we talk about the technology or if we talk about the contemporary areas or non-contemporary or the newer opportunity for the membership. I really appreciate the way this CP committee is doing it. And hopefully today's program also, newer opportunities in the labor segment in the time to come, because India is a growth-oriented economy and we are touching the newer heights in the economic sector. So hopefully this reforms will be bringing out so many changes, and our profession will be the best benefited out of this newer economic and the economic law changes and regulatory mechanism of the country. Thank you all. Thank you very much. Thank you, Vishnu Bhai, for inviting me. Thank you, Satish Bhai. Thank you very much.
Thank you, Chuk Sab. Friends, just I want to tell you about the Chuk Sab, Ansrat Chukji. He belongs to the Delhi, and all 24/7. Whenever I goes to Delhi and whenever I meet him in any of the program, and after the program, when I discuss with him, always he discuss about the student and members, how the members will grow and the students will grow from our profession. So friends, just because not only he's today he's available on our program, but whenever I meet to him, always he talk about the profession only. So this type of the people sacrificing his total whole life from regional council to the central council. In the central council also he has given 7 years. This is the 7 year of his in central council, and remaining 3 years he will again give, and the 6th year he has given to the western northern region in the regional council. And lot of such decision he has taken, and now also for the benefit of the student in the city by city he is doing the program, brainstorming program for the syllabus also, how to growth of the student also. He has invited so many suggestions from the members. So I thank you, Chuk Sahab, Hansraj Chukji, for taking wonderful giving the wonderful ideas to the profession, taking so many pains, sir, for the profession. Thank you, Chuk Sahab, for giving your time to the CP committee. And now I coming to the sir. I think we not give my introduction because we give more and more time to our speaker. So I thank you, our moderator Manmohan Modi ji, and our today's learned speaker Prem Nath ji and Siva Goyal ji on the labor law and the GST. Friends, under the CP committee under the chairmanship of Satish Gupta ji, We have done so many programs under the leadership of Satish Gupta ji and our leadership of our presidents Charanjit Singh Nanda ji and Vice President Prasanna Kumar ji. Friends, we have done so many programs time to time for the benefit of our all the members because we both chairman and vice chairman always thought that each and every reforms whenever comes timely delivered to the members and the students. Friends, I'm also vice chairman of the direct tax committee. Under the direct tax committee, we have taken out so many reforms and so many representation we have given before the CBDT. And friends, again, we have just came out with our Direct Tax Income Tax Act 2025, which is available on the cell counter. It's only 500 rupees. And all the publication house is selling in the 2000 and 2500 rupees. So, as a direct tax committee, we have thought that why we should not print this Income Tax Act 2025. Friends, and now I will not take much of the time because so many changes we have taken under the direct tax committee and the CP committee. But because of the time limit, friends, we want to give maximum time to our speakers. So I request our moderator, Manmohan Modi ji, to introduce our speaker for the benefit of all the members. Thank you, friends.
Thank you, Vishnu sir. Now, around 700 participants have joined the webinar, and our first session is on Labor Code 2025. And our today's speaker is Sri Premnathji Degalaji. Sri Premnath Degalaji is a fellow chartered accountant with extensive experience in internal, external, and forensic audits across large manufacturing companies, PSUs, infrastructure, and software sectors. He specializes in bank audits, income tax, representation, including international taxation and transfer pricing, and reviews of IFC, SOPs, and SAP implementation. He has contributed significantly to ICI through his roles in PRB, FRRB, TAQRB, QRB, and various technical and AI focused committees. He has also submitted key proposals on FRRB automation and audit automation tools. He is regular speaker at ICI since 2000 and serves as a faculty for certification courses on concurrent audit, GST, AI, and AML. So I now request Sri Premnathji to deliver his speech.
Right. Thank you.
Thank you.
Thank you. Thank you. Thank you very much. I hope my voice level is audible. Kindly confirm my voice level is audible.
Yes, it's audible. You please
Yeah.
start.
Right. Thank you. At the outset, I thank CPA committee for giving me this wonderful opportunity. I'll share my presentation. I have not made any formal presentation. I'm just trying to. I've made a small HTML document to cover the subject. Like when someone invites us for a tea, basically they say, come and have a cup of tea. But it's not the tea that is served along with the tea. Snacks and other things are served along with the tea. In the same way, today we are talking about Labor Code 2025. I'll not, although I'll speak about the labor code, but in and around the labor code, there are various other opportunities that a chartered accountant can build. Anyway, when GST was introduced, it is not the GST which members have learned. Because of GST, many chartered accountants' skills in Excel has been improved because of reconciliation, because of reconciling huge amount of data. We have learned a good knowledge in hands-on experience on Excel. Never before we have learned all those. In the same way, when we are talking about labor, it is labor compliances. It is high time that the chartered accountant should look at what are all the other various compliances and interplay related things that we can handle for a client as a part of, I'm sorry to say client, because certain code of conduct certain doesn't permit handling certain things for a client, audit client. Otherwise, yes, we can do. Audit client in the sense, if I'm doing a tax audit, then I cannot handle it. But as it is, you know very well that the tax audit combinations are coming down. Like if you look at what Satish sir has said, remote, he has used a very good word, remote. I'm also concentrating more on the remote practice. When it comes to the remote practice, most of the practice is in and around presumptive taxation, where it is out of tax audit. But still, there are a lot of opportunities for a chartered accountant to look into it. I'll go much deeper into it. When you say it is presumptive taxation, generally GST data is taken, then compile the GST data, ensure 3B, etc., etc. Then look whether the cash components is within 5%, etc., etc., and whether it is 5% or 8% or 50%, whatever, we comply and then get out of it. But there are so many interplays. Like, say, for example, if you talk about a clinic or a doctor's, there are so many interplay. Like they have to talk about the hazard maintenance, which is completely neglected, and a lot of penalties are as a part of pollution control board, labor laws, and so on, whatnot. I'll be just touching upon all those issues where we can look it into. So that is how I would like to make the presentation, number one. Number two, as you all know that there is some kind of opinion on the chartered accountants in this country that we are more of litigants. But I am trying to make this presentation from the point of that we are now going to help the government and the labor force from the Atmanirbhar point of view. We are no more into that. We are more now into helping the labor force so that the economy will start revolving towards, moving towards 5 trillion economy with the labor force. We are going to get in touch with them. And at the same time, we'll also be helping the small and medium MSME and small and medium is what I am more concentrated, because if it is, I've just written this also. I've compiled through using AI. I've compiled a book. I'll be distributing it through a QR code. I'll share the QR code. You can download it. The purpose of drafting this playbook of labor code, which have been last 2-3 days, I've been designing it with the help of AI, is to see that how best we can align with the business community. I'm worried about saying client, because if I say client, please do not accidentally or otherwise I may refer client. Please don't think client is a client for whom I'm doing audit. Let's not get blindly driven towards where I say, when I say client, it's not the client where I do a tax audit. Forget about it for a moment. Okay, now come, let's move on into how I'm going to move it. I've just made, the book has been converted into HTML, which I'll again be sharing with you. Yeah. Right. So I'm just saying here, India is witnessing a historical transition of the labor workforce, and 29 labor codes have been made into 4 now. Large enterprises have a resource to navigate, but real transformation occurs at the district headquarters and small towns. This is my focus area. That is what Satish sir was saying. Remote chartered accountants, ICI and we the chartered accountants needs to hold hand holding of the district headquarters or the small town chartered accountants. And this presentation is highly towards keeping them in mind. So where business operates with informal employment practices, minimal documentation, and limited exposure to technology-driven compliances. So this is the biggest challenge that the business communities and the chartered accountants at the district headquarters and small towns are facing. So I'm trying to address how best we can handhold them. So these enterprises form a backbone of Indian economy. Okay. So now traditionally recognized for expertise in tax assurance and financial reporting. But the financial reporting, as you know, yesterday there was a news in the WhatsApp widely getting spreaded that the central government is thinking of 1 crore and less. The corporate audits will be removed from the threshold is at present 1 crore. We don't know, it just goes up like any other thresholds, be that as it is for a while. And we are more into taxation and taxation. So the scope for taxation is coming down slowly. Everyone is facing this heat because of the compliance level going up, because of the adoption of technology, AI adoption, machine learning adoption on the other side. Other side, I mean, not on the business, but on the government side. I'll also demonstrate at a time when the black money is the moment it is getting converted. Earlier, it used to take 10, 20 years to deep drive to locate it. But now, the moment someone is having an idea of converting a black into white, the department is able to sense through the digital machine learning process. I'll demonstrate anyhow in a while on a dummy data. But what I'm trying to say is traditionally we are more into this. Now we need to move away from this because the opportunities in this field, except for the litigation, is coming down due to the enormous technology implementation, technology investments at the regulator side. Okay. One centered on labor governance and wage architecture, digital compliance automation is picking up now. And that's the reason why 29 has been made into 4. And we have seen all the departments are getting digitized, the taxation, income tax, and GST. And now the next digitization will be on the labor force. And then hence, it is better that we are there before they come out. So that is in that sense, I've just made this. So rare combination of the profession possesses rare combination of documentary discipline, regulatory insight, technology adoption, capability to glide business labor environment. So I said Atmanirbhar Bharat. So I made a playbook. As I said, I'll be distributing it at the end of the time session. I'll just give the QR code you can download to get. So what I'll be talking upon to whatever extent possible today, actionable approach to implementing labor code, sector specific insights tailored for MSME like service unit, manufacturing hub, hospital, logistics, and so on. Structured wage model, how do we structure pre-code and post-code? What is the impact on labor? What is the impact on the management? Will be discussed. Then how digital workforce integrating into Tally, Excel, AI assisted or OCR, robotic process automation, wherever possible. I'll be just touching upon advisory path. Not only that, because of the labor, huge penalties have now been put into the code. Litigation support. Till now, we were giving litigation support on taxation. Now, this is another opportunity for the chartered accountants to enter into the litigation support with the labor, where there is going to be a tribunal and so on. At least after High Court, we are anyhow not allowed, but up to the High Court, up to the tribunal levels, we can. Now that there is a opportunity for the chartered accountants to come into this area. And then what tools and templates, scripts to reduce clerical issues and then focus on value added services. More importantly, how best AI can be integrated into AI prompts, or how best we can integrate into all this, is also covered in this thing. This is what I thought I can cover. Let me just go on to the. I made 10 chapters on this. I made 10 chapters on these things with certain examples. I'll move on to the chapter 1 now. So, what India is undergoing, as we have already said, introduction of four codes. One is wages, social security, industrial relations, and occupation safety, is what the four modules it has. A marked shift towards there is a simplified compliance, universal security, social security across the country like GST, common rates, structured wage systems across the country, worker dignity, future ready labor administration, which will be digitized. And this is where, if the department is digitized, businesses are digitized, we the chartered accountants needs to be digitized. You all know 10 years back, neither the department nor the businesses were digitized properly. And that is a time when chartered accountants, with digital support, they were rendering services both to the government regulators and to the business community. Today it is, unfortunately, today it is completely reversed, wherein government is moving at a speed of 500 kilometers, say for example, business at 200. Permit me to say, chartered accountants are not investing on the technologies. Permit me to say that this is very hard to digest. Okay, be that as it is. As this code comes into effect, businesses across India, especially district headquarters, need to structured guidance. Earlier, it's not like earlier regime where chalta hai attitudes will go on, because we have seen how under VAT regime the things were moving slow. Now you see how under the GST regime, after digitization, the movement has picked up. In the same way, the labor code will also going to pick up heavily. Before advocates occupy that space, traditionally they are there in the space. Before they occupy the space, it is better that we start approaching the client and make them aware about all these issues. So, what generally in the districts you have MSME, small manufacturing, rice and roll mills, um, welding, fabricators, petrol pumps, and so on and so on. I don't want to read out all this. These units create enormous employment but face chronic challenges of unstructured payroll. All these days, we were thinking that a client is paying presumptive taxation. What should I do there in this? But this is where you have a huge opportunities waiting for us in this area. So you have an unstructured payroll, informal worker engagements, missing statutory records, poor compliance awareness, high inspection risk, poor documentation culture, low technology adoption. And these are all the challenges, which is a huge opportunity waiting for us in the name of labor compliance, new code. Like I said, when VAT regime, when GST has entered into, ICI has played a dominant role in making chartered accountants adopt to the GST, and GST made has trained us to adopt technology along with GST, because the GST itself is a technology driven tax. Hence, I've also become tech-driven CA because of the GST. In the same way, I need to convert this opportunity to be more tech in rendering services. Okay, chartered accountant, strategic partner in national development. Traditionally associated taxation. Now you have labor compliance, workman protection, formalization of enterprise, digital transformation, which is nothing but Atmanirbhar Bharat. So, formalization of the workforce, social security, ease of doing, digital governance is what I would like to cover. CAs operate with reputation and so on. Now, why district headquarters need this presentation? What I'm saying, because most businesses are owner driven, compliance knowledge is low, HR departments barely exist, payroll is unstructured, appointments are often verbal. The new act makes it compulsory to have an appointment letter. And this is where they don't have these. And labor records are incomplete, work migration, informal contractors, accidents are common, disputes escalate, inspection often create panic. So, but these businesses want to comply. They simply lack clarity, systems, template, process, technology adoption, and hence we, the chartered accountants, and this presentation, what I am using, like the HTML, will provide practical labor compliance knowledge, wage structuring, social security, industry wise checklists, templates and SOP, digital tools and automation, RPA and AI, tally, and so on. So CAs can use this to what they can do, what CAs can do now. Advisory practice on helping business structure compliances properly. BPO compliance services I can take up for monthly payroll, registers, filing, and I can do this when I say BPO, it is no more paper, it is paperless. It should be moving towards paperless. You might be asking me, what is this paperless? Let me just demonstrate and then come back to you. I don't want to get stuck at one presentation for a longer time. Let me just move on to this. Yeah. Say paperless. What I'm talking about is, I'll come back to this again. What I'm talking about paperless is, like, say, for example, I have a hotel, uh, permit me to say it is a client where I am not doing a tax audit, permit me for a time being. So if a hotel business is there, if I am filing regular GST returns, what else I can do? There are so many industries I have clicked it. I'll be sharing this with you. So what else I can do? What else I can do is, I'll just go and then find out whether your FSSAI license is renewed. I say not done, say. Fire NOC is valid, say not done. GST returns is not done, partially or partially it is. Say PF, ESI and all is not done at all. So what? So what is the risk for him? What is the risk for him? I'll just generate the report here. Once I generate a report, it says heat map. It is critical for him now. Compliance health score is 6, needs CS, needs urgent CA support in this. Okay. What I've done, I've just sat with him for each industry, and I'm just still telling them within next 12 months what I can do. Yeah, how do I communicate this to the businessman? How do I communicate this to the businessman? I'll just say share on the WhatsApp. I can share this on the WhatsApp. So now you can just see here. The WhatsApp has been sent to him. So in this manner, yeah, in this manner, I can, I can do into lot of various other things I can go into now. Yeah, I'll open again. Yeah. So I can check for various, I can check for various. We are more compliance. I'm talking about compliance. I'll come back again. We are more into presumptive taxation and just we are filing the GST returns and then going out. But is there something else I can do with the bank statement scrutiny? Generally, bank statement scrutinies are not that much carried out because we are more bothered about presumptive taxation. I'll just load a bank statement and just say generate a report. Now it says 47 round figure credits are there in this. Same party repeated 38 times, sudden turnover spike, money mole risk. So we can protect you from IT rights. Initial review is free. This is what something we can send them as a WhatsApp message to the businessman. So what I'm talking about. The point what I'm trying to refer here, just a moment. Yeah, just a moment. I'm saying it's not just advisory helping structure compliance, BPO compliances through the technology. Like if I can able to configure Tally properly, the monthly payroll registers and filings can be automated. And how do I automate Tally with Excel? Today, AI integration into Tally. Excel and Tally can speak. Python and Tally can speak today. Dynamically they can speak. Whatever I enter in Excel can dynamically go and sit in. Whatever is there in a paper, I can take a photo. Whatever is there in the paper, I can just take a photo. And then the entries are going into Tally. That kind of support is there. Then BPO compliances. Then dispute resolution, representations, documentations, and inspection support we can give, because we are more, many of the chartered accountants have completed arbitration and reconciliation kind of courses wherein we can enter into dispute resolutions, because there are a lot of always labor force issues are there, representation before the labor tribunals which are yet to be set up, and so on. Technology-led MIS services, dashboard reconciliation, compliance calendars, digital transformations, etc. we can do. So this create new avenues. That is what I said. Labor code has come with little bit, not much too. But along with the labor code, you are also getting so many other opportunities. When GST has entered, it is not just GST, but GST with technology has entered into. GST implementation services we have done. GST regular filing services, GST litigation support we have done. In the same way now, labor code has come. Along with the labor code technology implementation, compliances, and legal support can also be done with this. Okay, vision statement of the book. Championing labor dignity and social protection, empowering district businesses with digital compliance, formalization, cost effective. So this structure of the playbook is business landscape applicability, labor law compliance, representation, interplay of other laws, BPO. Quickly, I'll run through this. Ethical. When I as a chartered accountant carrying out all these things, I need to comply with ICI code of conduct. So how do I do this? Practical advisory and wage structuring. Various sectors you have, for various sectors, what templates and how automation can help in this. Yes. Disclaimer, as I said, the publication is designed using AI assisted drafting, no doubt. Combined with deep CA domain prompts, regulatory interpretations, professional judgments were made while deciding the content. It is designed to deliver high quality, actionable knowledge, but must be used with professional discretion, updated and contextual. Now let's move on to the chapter 2. District level, as I have said, we have already covered these kind of things are there. Typical businesses, what they have, 10 into 100 and so on. Pain points is accident risks, informal wages, PF, ESI, non-compliances, absence of appointment letters. Healthcare, what is the pain point? Shift duties like women work in the night shifts and all, now that is removed, where they can take a concurrence, and then this can be overtime disputes, ESI applicability, medical legal risks, patient data privacy, DPDP Act has come in now. So retail pharmacies and all, sale linked wages, attendance issues, missing payroll records, labor shortage, high attritions and all. Lorry related, what are the issues in lorry? I'll not be reading out all this for the paucity of time. So each industry, whatever is applicable, I could able to select and put it into the pain points here for major industries. And what is that employment scale and code applicability here? So when an employee establishment size is 1 to 9, the typical sector is doctor and retails. Now this is where wage code plus Local Shops and Establishment Act comes into play here. When it is 10 to 49, mills and hotels come into where social security and the other social security health provisions come into. 50 plus employees in manufacturing, full code including industrial relations will come into play. When it is 100 plus employees, large units, standing orders, inspection, work committees, and so on, come into this. So why these businesses need structured advice? We have already talked about. Doesn't have a legal definition of wage like earlier. Believes in filing or optional unless caught. Only when someone visits for an inspection, that is when they start rolling out. But that is a time when they shell out huge official and unofficial monies into it with a pain. Panic during labor inspection and reputational challenges. Assume notices mean penalties and so on and so on. Now, with rising digital enforcement and Aadhaar linked records, ignorance is no longer a shield. CA is a multidisciplinary compliance architecture, trust by stakeholders, familiarity with local realities, skilled in documentation, technology familiar, and so on. So, what are the business pains which I have already said? Pain points is no appointment letter, improper wage breaks, PF arrears, frequent disputes, accidents, and all. What CA can do is HR implementation, wage structuring, compliance, and so on. Revenue potential is onboard consulting, monthly retainership, settlement advisory, inspection support, and outside. So, this is the pain point. This is where we can do what is the revenue potential we have for a CS. Chapter wise, I have linked it. Chapter 3 here talks about labor code and compliance fundamentals. 4 talks about dispute resolution representation. 6 BPO service. 7 digital. 10 sector specific templates. Summary, I would just skip this summary and go on to the third one. So we have 4 codes as have been 29 has been reduced to 2. 29 has been reduced to 4. The code on wages standardized wage definition and ensures minimum wages for all employees. Industrial Relation Code harmonizes framework for hiring, retrenching, and dispute resolution. Code year 2020 does come. Code on Social Security extends PF, ESI, gratuity, social protection to all categories of workers, including gig and platform workers. Occupational Safety Health, OSH, Occupational Safety Health Working Conditions 2020 consolidate work safety and welfare provision across the industries. All the 29 has been brought into 4 code now. The principles of labor code is universalization, like one rate, one country, one rate kind of a thing. Every worker, regular or contract or fixed term or platform or gig or now, gets statutory protection. Simplification, multiple laws replaced with unified provisions, less filings, single registration, reduced compliance burden. Digitization, records, register, master rolls, and returns are becoming digital, ensuring traceability and portability. This is where we need to come. When GST returns are digitized, GSTR 1, 2, 3, 2A, 3B, when ITR 1 to 7 is digitized, online, faceless is all digitized, we got much value in the same way. The labor records are now getting digitized, mandatory. That is where we need to jump and encash this. Formalization, now appointment letters, wage slips, attendance systems are now enforceable essentials, which is not there earlier. You know, I think many chartered accountants are aware of the contractor who offer 8% for the income tax or 6% or whatever percentage they offer to the income tax, get out of tax audit, pay, plan and play, plan and file in pay in such a way that it meets to the TDS requirements. within the TDS requirements, credit is adjusted. But now that is the end of taxation there. But now, when once this digitization moves on, when the contractor is not even giving appointment letters and not maintaining any books of accounts, it is the other department like GST or any other department now going to enter into the premises of the contractors. Reason is one side you are only looking at one side we are only looking at employer is paying 12% or whatever PF, ESI, whatever they are paying. You are only looking at one side. The other side, you are looking at employee is getting some benefit, labor is getting some benefit. There is other side of the coin. There is other side of the coin. The contributions made by the employee and employer is going to become a money for the government. It's a source of revenue. It's not a source of revenue, it's a source of funding. The deduction statutory payments on behalf of labor made by the employer are the source of funding for the government today. Which government will sacrifice this source? If business community is not complying with these things, why will state or central governments keep quiet? Because it's becoming a source. Every state government today is running under negative budgets. They don't leave this. Hence, that is a time when every employer feels the pain of compliances before they feel it is the chartered accountants we can handhold them. What is the wage definition now? This is the only important thing in the code on the wages. Very important one, definition of wage. Now, the definition of wage includes basic, dearness, and retaining allowance. Okay. Exclusions limited to only 50% cap, such as HR, conveyance, overtime, bonus, PF contribution, special allowances, commission, etc., all to be excluded. And all should form within the 50%. This should be within the 50%. The reason is basic, on the basic, they are deciding these contributions, and basic is kept lower amount so that the contributions are limited. Mind it, I said the third lens of viewing by the government is they are looking these as a source of contribution, source of funding for them, and any more tax planning, any more wage planning with these things cannot sustain. Hence, this is an area where chartered accountant can step in. What happens? This will impact PF calculations, gratuity provisioning, bonus eligibility, and leave encashment, compensation claims will be increased. And it's going to benefit the labor and long term. Government immediately benefit. Employer is going to shell down more. So, what is the implication for a chartered accountant? The payroll system structured per wage definition, PF applied on correct wage base, gratuity computed realistically, miscalculation of allowances avoided, register updated for inspections, contract aligned with fixed term rules. Earlier, we all know that the gratuity is for 5 years for a permanent. Now, fixed term employees who work for a specific period in a year for 1 year. Earlier, unless it is 5 years, gratuity is not there. Now, whoever is fixed term, if he is for 1 year, yes, he now starts accumulating gratuity. And this is the biggest change. Now, statutory documents and registers under code. These are the mandatory things, that is appointment letter register, proof of employment, wage register, attendance and muster roll, leave register, PF and ESI records, health and safety training because of OSH, which we have talked about, women night shift consent register, contract labor engagement register. These are the things that they have to maintain. This is all going to be digital in the days to come. There are already so many softwares which are working on HR packages, but affordability now, thanks to AI, we all can develop our own. Not only develop our own, you can also customize the existing tally for all this. Timely wage payment is on every seventh the wages has to be paid. Deductions capped by law, no arbitrary withholding. Final settlement timelines are mandated. Why this matters to the CA? Because it ensures bank transfers aligned with statutory timelines, reconcile wages with tally and bank statement, maintain proof of compliance. Once you digitize, relate, all these things will become a good value addition to the client. Coverage expanded to contract labor, fixed term employees, gig workers, platform workers, domestic workers, seasonal workers, and so on. Notable encashment enhancements are pre-code, the establishment, there was a threshold. Now it is worker centric. ESI is only notified areas, now it is nationwide. Gratuity earlier it is 5 years, now it is fixed term. CAs must recalibrate employee onboarding and payroll master data accordingly. I repeat again at the cost of boring you, we were more bothered now only up to presumptive 8% and 20 lakhs, 40 lakhs or 1, 2 crores of GST filings. Now this is an opportunity for us. Occupational safety, OSH, we are talking about. Mills, logistic yards, chemical godowns, petroleum handling, nursing homes now require safety committees, PPE issuance, logs, protective, that is what, like helmets, gloves, and so on. Annual medical checkups, hazard identification, emergency response plans have to be in place for these kind of things. Accident now triggers social media coverage, inspections, FIRs, legal scrutiny. Something happens, we might have seen in the recent past, number of road accidents. The moment road accidents, these buses are owned by high net worth individuals, sometimes even MLAs and MLCs. So on the social media outrage and all, how much of damage it is creating, reputation damage. And this is where compliance is. Every bus which goes on the road should have two drivers for the night shift. And most of the private buses doesn't have this. Insurances and so on, whatever it is. Now, industrial code, grievance handling should be there, standing orders, trade union recognitions, retrenchment procedures, dispute settlement pathways have to be established for industrial relations. Industrial relations are where 100 employees or more. CAs, what a CA can do, assist in documentation, help organizational, avoid illegal terminations, maintain records, and hold up the tribunal representations and so on. They cannot act as advocates up to the compiling records for clients, but other businesses whom you are not rendering tax audit, you can just do it. So this is what is well covered in Chapter 4. Practical compliance for the flow of CS. So identify establishment category. What should I do now? Yes, after listening to all these things, I'm interested in entering into this business now. How do I do? How do I start? What should I do? Now, first identify the established categories. Which category are you? Are you industry? Are you less than 100? More than 100? Are you a clinical with less than 10? More than 10? More than 20? More than 50? Identify. Check applicability thresholds. Structure wage components. Register employees for PF and ESIs. Prepare statutory registers. Design payroll cycles. Maintain inspection readiness. Review contracts for fixed term rules. Ensure safety documentation. Create digital audit trail. conduct trainings, be as a arbitrator, reconciliation, be as an agent. We can do all this. This is recurring retainer services, not one time. Cross references I have given anyhow. To do all these things, you need to have a BPO and payroll outsourcing. How you can do is described in chapter 6. If when I'm doing this BPO and outsourcing, how best I can use tally and document audit automation in chapter 7, wage structuring in 9, and templates in this. Summary, I don't want to read out. Then let's go on to the chapter 4. Disputes in labor matters arise more frequently today than at other time, largely due to increased awareness of worker rights. Because of the digital and media and social media, and most of them are getting educated today, and most of them are 10th and 10 plus 2 and degree holders. They know their rights and then they start asking for now. So digital trail of payments and attendances, social media amplification, politicalization of workplace events, and so on. Even minor workplace disagreements can escalate into a labor inspection, viral news clips, protest by work groups, political interventions, police complaints, and tribunal proceedings will be there. And that's where chartered accountants can enter into litigation practices. What are the nature of disputes you can foresee? Wage disputes, social security disputes, termination disputes, safety related disputes, contractual labor issues, gender and night shift disputes, platform gig workers, undefined services. What is the role in dispute management a chartered accountant can do? Prepare statutory records, compile payroll, draft submissions, assist reconciliation proceedings, support legal counsel, communicate authorities professionally, help prevent non-compliances. The practical steps for representation: initially identify the nature of complaint. This we all know. Because we are in and out, we are already doing representation. I'll just try to skip this. Now, what are the authorities where you can? Labor inspector, wage and register compliances goes to labor. Assistant labor commissioner with conciliations and disputes. Labor commissioner escalated matters. Industrial tribunals adjudication. Appellate tribunal final resolution. These are all within the purview of chartered accountants. Modern dispute dynamics, how this can trigger is given it. I'll just leave this with one. Recently Supreme Court, a high profile financial bank fraud exceeding 5,000 crores was settled with a settlement wherein the borrower has paid full amount and he was out of all the criminal proceedings. Such a big issue was settled through the settlement process, compromise and settlement process, legally available under Article 21 of the Constitution and other other penal code compounding. When such an offense is compounded, and you can understand how much can be compounded in all these things with mediation, etc., with our representation skills. So I'll just move on. Mistakes district business commonly make is verbal appointments, cash wages, contractor dependency, women and night shift. Wherever contractors are there, many chartered accountants aware, contractors simply write wages and wages in cash. Now that doesn't work. Even if it is presumptive, that doesn't work now. This is a golden opportunity for the chartered accountants now. What a CA should not do not act as advocate in court unless you are registered there and surrendered COP. Do not promise outcomes, do not suppress record, do not certify. Without verification, do not negotiate illegal settlements. So inspection management, I'll just skip for a moment and then move on to the next chapter. Single establishment in district headquarters may be governed simultaneously by, This is what it is. Not labor alone we are thinking about. As I said, if someone invites to you for a tea, it is not just tea they serve tea, biscuits, namkin, and so on and so on. In the same way, the labor code 2025 has come to us. It has not come to us just with labor code. Now it is a golden opportunity to look into all interplay of these acts where we can render our services. Labor code, municipal trade license, pollution control norms, fire safety, hospital, factory rules, transport and motor vehicle laws, GST and income tax, digital privacy. This is now stepped in, and it will be fully operational by May 2027. By the time we should be ready with all this, including chartered accountants. Sector specific like RERA, FSSAI, drug control, and so on and so on, must understand this interconnected ecosystem, because non-compliance in one law often triggers penalties in other. Like say for example, when cash is paid as labor, and the labor commissioner says that you have violated a labor code, not paying all in cash, paying all in cash, and you don't maintain registers and all, that will automatically trigger the income tax, saying that these are all binami, these are all black money, these are all suppressed, and so on and so on. That is the interplay that we are going to expect in the days to come. And and it is the responsibility of the chartered accountant to educate the businessman the interplay and its effect on this compliance convergence era. Compliance convergence era. Modern governance in India emphasizes digital transparency, centralized database, Aadhaar linked, geotagged, unified inspection portals. This means a PF default can now alert ESI, labor dispute can trigger GST, industrial accident can lead to FIR, and whatnot. Having said this, having said this, I would like to demonstrate how uh, digital data, this is what is mentioned here, digital, centralized, Aadhaar linked, geotagging. You're seeing all this. Because of this, the tax compliance percentage is ever increasing, not that the GDP is growing. Because the compliance is growing, tax compliance is growing, tax revenue is increasing, not that GDP is increasing, tax is increasing. I have a different opinion. So, what I'm saying is, because of this compliances, labor law and code will enhance like anything in the days to come. It is high time that we need to go. So, what am I trying to say here? What am I trying to demonstrate here? So, what I'm going to demonstrate here now is to show you. Okay. Let me just show you a sample data what has been generated. Like say for example, you have Aadhaar family network. Now the regulators can generate Aadhaar, can generate Aadhaar linking to various family members. This is primary Aadhaar, this is Aadhaar of the related, and this is the PAN of primary, this is the PAN of related, and now you can see it is mother, and so on. So with all Aadhaars and PANs getting networked, it is going more on predictive to preventive. Let me again show some more thing for you. Like say for example, ETDS. I'm just taking this example of taxation because we all can connect immediately to the taxation. Let's just say I'm just trying to show you 27,000 ETDS records, 27,000 ETDS records. And these are all department and director and company mapping, directors, FIU reports.
Premnath sir,
Yes, sir.
sir,
Yeah.
we have only 1 minute.
1 minute. I just give me 3-4 minutes, huh?
Okay, okay.
3-4 minutes, please. So now we have all these kinds of files. Why I'm talking about these files is I'm talking about digital transparency. Now, so what is the impact of this? What is the impact is I have loaded all those, I can load all those data, I can load all those CSV files into, it may take time, as already there is a warning. Now what I do is, this is already loaded here. Now I just run this. Now it is running, demo loaded successfully. AI powered fraud detection is going on. It may just take 2-3 minutes of time. I don't want to waste your time. We'll continue this and then I'll come back to this by the time the report will be ready. Okay. Now, key regulatory interfaces with the labor laws is Labor Department, Wage Register, and so on, EPF, Social Security, ESI, and state. Quickly, we were saying that how structures can be done. Why CAs are ideal for BPO, regulatory knowledge is there, documentation, discipline, all this. Scope of labor compliances, outsourcing PF, which we have already touched upon. Um, Let me just go on to the next chapter. Digitize what you can do. Yeah, I said anyhow, I'll just. So what Tally and Excel can do is WhatsApp photo registers, handwritten sheets can also be scanned and then it can read it, read images. What Python and Tally can do, I've just given it here because of running time. Accounting Tally, what tools CA can immediately use in this accounting Tally, payroll, press register, AI extraction, Google Vision, images to Excel, robotic process automation, data privacy tools, and so on. So, 8, employee data and all. So, there are, this is wage 50% exceeding. HR cannot be there now. Bonus and all should be out of it. Now, practically, what it will be now? Basic, DA, HRA, all should be within this 50. Conveyance and all cannot be there. So, wage is equal to DA, basic plus DA is 11,000, which is 55. It is compliant. On this, now PF is given. So, this is how it works out. Let me just see whether this is done or not. Yeah, this analysis is completed. Now you can just see here, there are out of those data, what I have shown you, out of all this data, the fraud amount highlighted is 4,794 crores is detected in just 3 minutes of time. And this is how the digital revolution is going on. Now, TDS scheme, what happened in this? Mool claiming presumptive taxation and the total amount of refund is given back to the company. Mool accounts is detected here. In the same way, I can just take you to critical risks. Analytical dashboard. Now you can just see the analytical red flags by petty income mismatch, structured payments, TDS refund, profile mismatch, GST evasion, Mool accounts. Those who are listening for the first time, coming across for the first time, you can Google on this. You will find a lot of interesting things for us. Now, fraudulent payment by TDS, 10 companies, fraud amount, and so on and so on and so on. Now, why we have touched upon this? The purpose of touching this is to tell you that because of digitization, it is opening up enormous amounts of opportunities for a tax auditor, for a chartered accountant. So what we can do? Finally, low cost tech stack for CS, automation toolkit is all put into this. As I said, I will share the QR code, and this is the QR code. Those who want to download, I am just keeping this for a while. I am just keeping this for a while. Those who are interested,
Sir, we
you
have
can
already
scan
passed
it.
it.
You can scan it, then you can download it. You can scan and you can download it. Is this visible, sir? Is this QR code visible, sir?
Yes, yes.
Yeah. Is it visible? Please confirm. Is it visible?
Yes, yes, yes.
Yeah. Thank you. Thank you. So I'll just quit now. Just a
Sir,
moment.
we have already passed the time.
Yeah, yeah, yeah. I'm just stopping it. Yeah. Okay. Thank you very much for your wonderful opportunity. Thank you very much.
Thanks, Premnath sir,
Yeah.
for your valuable information and knowledge about labor code, and hope our member from all over India and also from overseas have gained a lot and will be helpful for them. Thanks a lot. We have some questions I am
Yeah.
asking,
Yeah, yeah.
right?
Can we take up in the last or
Yeah.
yeah?
Hmm. Sir, Sir Chintan Kumar from Ahmedabad asked, do we need to make a provision for gratuity in books ending 31st March 26 in CA form, proprietorship form?
See, proprietary firm,
Yeah.
if they are following cash basis, not required, no?
Okay.
Yeah.
And please explain FTA and what is structured wage.
Structuring wage now, like say, for example, 50%, whatever you talk, total if you are paying 1 lakh of salary, 50% has to be within the basic, has to be basic. Earlier, the basic is 15,000, 20,000 something, on that only PF is paid. Now, if I am paying all allowances, including if I am paying 1 lakh, then on 50% PF, ESI or gratuity, all those things will be calculated. Earlier, on only 15, 20,000 it was calculated. That is how you can structure it.
Right, sir. And sir,
Yeah.
last question from
Yeah.
Jeremy from Chennai is that if government treats PF etc. as source of funding, how can the employee get back the contribution when he is need of?
See, it is a running amount, it is a running account. Anytime the government has a fund, they can get it back. Whenever they are eligible, they can put a claim. It's a rolling account, they can get it. What is wrong in that? What is the difficulty in that?
Okay. Okay.
Yeah.
Thanks a lot, Prema sir,
Yeah.
for
Thank
your
you.
valuable insights.
Yeah.
Now we are moving towards our second session. Let me introduce our second session speaker, Sri Shiva Goyalji. Sri Shiva Goyalji is a fellow chartered accountant and a noted speaker in indirect tax domain with over a decade of experience in GST and customs. He currently serves as a special invitee to the Indirect Tax Committee of NIRC of ICI 2025-26. He has been recognized with Rashtriya Gaurav Award and the Young Entrepreneur Award 2022 for his significant professional contributions. He has delivered more than 200 sessions across ICA branches, Tax Bar Association, and premier forums nationwide, and is regularly invited by Haryana GST Department and Central Government Training Academy for IRS officers to share insights on critical GST matters. He has co-authored the handbook GST Impact on Real Estate Sector and has also served as a consultant to the GST Council Secretariat, reflecting his strong policy level expertise. So now, without wasting time, I hand over the session to Shiva Goel sir.
Thank you so much, Manmohanji, Premnathji, and all the members present here. CP committee, especially for giving me a chance to share my insights on the technical session, which is the very prominent one, the intricacies in the compensation cess after GST 2.0 reforms. So basically, as we all know, the GST 2.0 reforms uh, have been the Prime Minister's vision on the Independence Day speech, wherein he talked about the GST 2.0 as the next generation reforms, and compensation cess abolition was a part of it, and the rates were merged into compensations. So today, in this session, we will talk about the intricacies of the compensations. Don't you worry, I have a shorter presentation, and I will complete by probably 6 o'clock if all things go well. So participants do not need to worry about we are already late by 20 minutes. So sir will extend the time by 20 minutes, nothing like that. We will complete in time. So already I thought to give a disclaimer. Nevertheless, Premnath ji has talked about technology, which is very important per se, be it GST or any other area. Chartered accountants as members have to adopt the technology. There is no other way out. Apart from it, the profession is evolving, practice is changing very fast. So we should also find ways and means to change ourselves, coming from the going from back from the audits of the traditional practice to the new era or the new areas of practice that are largely available. Even in GST, there are a number of areas one can explore and get into other than the other than the GST returns and compliance or the notices, litigation, etc. So let me just share up the screen and start my presentation on the topic today. So the compensation cess has actually created a mess after GST 2.0 reforms. So I would like to talk about and discuss that how cess evolved and how things went away in the compensation cess specifically after the GST 2.0 reforms. So this is the agenda of the today. We will discuss about the introduction in the context within which the cess was introduced. We'll discuss about the rate structure analysis, why the cess was subsumed into the rates that were increased. Then the legal and the constitutional framework we will talk, which chartered accountants always give a professional advice or the legal opinion basis on the legal provisions. So we must know, in any case, we are dealing with the cess issue going forward. So we must know that what is the legal backing in the compensation cess provision of the GST Act, and what is the conclusion or the solution or the proposed solution and the way forward. So as we all know, the 56th GST Council meeting has been the historic council meeting wherein our Union Finance Minister Nirmala Sitharamanji has made a categorically GST reforms in the rate structures, which was previously into four rates: 5, 12, 28, 5, 12, 18, 28, into now three categories. Majorly two categories, 5 and 18, and third category of 40% only for the sin goods and the luxury items. So for simplicity, I can say now it's a two rate structure, even if the 40% rate is also there and 12% rate is also there for certain category of goods, fly ash, blocks or bricks, etc. So that was also maintained. So we say now we have a two tax rates, but in reality we have again four tax rates: 5, 12, 18 and 40%. Uh, I hope in the upcoming GST Council meeting we will again shorten it. The compensation cess was a separate levy, and it was why it was introduced. The cess was introduced just to compensate the state's revenue, which was arising from the loss of the revenue of the states, wherein the various taxes were subsumed into GST way back with effect from 1st July 2017. So initially, can everybody tell the GST, in GST the cess was introduced for how many period? I think anyone can put in the chat box also. So it was initially for 5 years till 2022, but when the COVID pandemic happened, the cess was, the levy and the collection of the cess was further increased or extended by another 4 years, and the constitutional levy was likely to end by 31st March 2026. So, to compensate the states again from the losses that arose during the COVID pandemic period, the various losses were there, business was shut down, and GST, there was no revenue of the government. So, again, the cess was extended per se through the notifications and through the legal notifications, and the constitutionally it was increased till 2026. So it was notification 1 by 2022. The compensation cess dated 24 June 2022 with the guidance received from the learned Attorney General under Section 12D read with Section 8 of the Compensation to States Act 2017. So now practically the cess was about to be ended by 31st March 2026. But what happened? The in this 56th GST Council meeting held on 3rd and 4th September 2025, the cess was abolished immediately with effect from the date of introduction of the new rates of the GST, that is 22nd September 2025. So you can say one of the notification of the cess was issued, and I have the notification with me. I will also show it further. The notification is notification sec 2 by 2025 compensation cess rate dated 17 September 2025, effective from 22nd September 25. So the introduction I have explained, the levied on sin goods, whether the cess is being levied even now into tobacco goods or some. Yes, except for tobacco goods, it was ended and subsumed into the new rates. For example, the coal. Coal earlier was having 5% GST rate plus 400 rupees per metric ton GST rate. So now, effective from 22nd September 25, the cess is carrying a GST rate of flat 18% with no compensation cess. So in the notification itself, against all the serial numbers, the rate nil has been substituted. I repeat, the rate nil has been substituted, and as you all know, in GST there is a relevance of nil, exempt, there is a relevance of zero rated, there is a relevance of 0% rated. So there is a definition of each and everything. You can't take anything like that in GST. So if you analyze the compensation cess notification, then the word nil was substituted before the items except for the tobacco and tobacco products, and it was decided in the council meeting that it shall be further. I have to just wait. It's a call from FM office. I have to attend it. So basically, it was introduced like that, and the subsumption was done in such a way that cess merged into various GST rates. Now, what happened when the cess ended? The problem which actually began was the credits of the compensation cess which were lying into the electronic credit ledgers of the automobile industry or the coal industry or the not the manufacturing companies, and anyway they are not producing the output cess liability, so otherwise also it has to be expensed off. But nevertheless, the 2500 rupees 2500 plus crore problem still remained. As per the FADA, there was a news came in that Federation of Dealers Association, they just came up with a rough figure that around 2500 crore rupees are going to be the loss for all the companies, are going to become the expense for the companies, and that cess will become the cost of the goods probably. So basically, if we can see, then the post subsumption, the no post subsumption, there was no cess liability that exists. So practically, when there is no output liability, the as per section 18.4, the cess has to be reversed. Even section 18.4, we will analyze it further, that not only the cess needs to be reversed, but also the input which is lying in the stock need to be discharged as an output liability. So what does that mean? Even if you don't have any cess input tax credit liability in your credit ledger, even then you have to pay output liability through the cash payment. So, how stringent this provision comes out to be when the compensation cess levy ended. So, when the FADA had represented to the ministry, so the area that needs earliest clarification came up from the FADA chairman or the president, that what would happen to the compensation cess credit lying in the dealer's account also. Honda के कितने dealers हैं, Hyundai के कितने lot of dealers are there of different companies. I'm not going to name any specifically, but there was a multi-sector impact on all these traders and all that stuff. Coal merchant and traders, tobacco industry, power companies. Cess was levied into so many products. So each and every industry faced this challenge where the cess was ended. So now finally, what is the status? FADA has lodged a Supreme Court a petition in the Honorable Supreme Court, wherein 17th of October, and they are made respondent as the CBIC and the GST Council, and they are in actual they are seeing for the relief that government did not give to them in the post GST Council discussion, and law it became the law as of now the law is that you have to reverse the ITC. The law is very clear as of now. Until and unless Supreme Court comes, any judgment comes in future and law is amended in the subsequent period, that is separate thing. But as of now, what is the law is in respect to the compensation says that all the automobile companies or the dealers or the power sector companies or the coal traders have to reverse the ITC as on 22nd September 2025, and ITC need to be reversed. Just a minute. Huh? So sorry for the interruption. So specifically till 21st September, small cars were having GST rate of 28% plus different cess rates. So practically in the small and large cars, so the rate was coming out to be 45%, 28% GST plus 17% cess rate. In the large cars, there were even 20% cess rate, and so on and so forth. Now, effective from 22nd September 2025, the small cars, mid-size cars, and the large cars, large-size cars with a certain engine capacity limit for diesel and petrol vehicles, the rates have been decided accordingly. But majorly, this is under two categories, 18 and 40%. So if we see that previously the mid-size cars were having a effective GST rate of 45%, but now post 22nd September 2025 they are having a GST rate of 40%. So effectively the rate has come down by 5% basis points. So it is like that. So eventually the rates have reduced. The rates for small cars which were previously 28% has now come out to be 18%. So as a result of which the various companies had passed on the benefit to the consumers also. In the GST Bachat Mahotsav, we have witnessed that the rates actually went down at the ground level also to the customers. And Diwali season, we could see the remarkable growth in the sales figures of the all the automobile industry. So there has been a significant impact on the reduction in the sales prices post ending of cess and introduction of the two rates, maximum 40%. It could not go beyond that. But eventually, the cess companies, the automobile companies have not made the component of the cess as a cost till now. They have not made it. But eventually, if they made it as a cost, then the rate benefit to the consumers, I think, in the upcoming period would not be seen much, considering the cess amount to be indulged as the cost amount. So pre-reform structure and the post-reform structure, there were lot of frequently asked questions that were also released by the Ministry of Finance, but they did not talk about the transitional credit on the cess part. Manmohanji, when GST was introduced, we all could see that there was a transitional provisions into the GST. For example, if you had a VAT credit or the excise credit or the service tax credit, then you could convert or transit that credit into GST credit using certain forms, Tran 1, Tran 2. But now in GST 2.0, when the compensation cess added and the new GST rates were introduced, should not there be a transitional provisions? Yes, there should have been the transitional provisions, but government said no. So I will discuss in the further slides that how can the government take away the vested input tax credit of the compensation cess which were effectively available with the dealers, and which was paid by us, which became constitutionally as per Article 300A, which became a vested right. And by changing law, the government is saying that no, you need to reverse it. So in the Supreme Court, the one of the ground might have been this also, that things have been taken up to the apex court. Now you see that the coal. If we talk about coal, then the power companies, once the decision came after 3rd September that the coal rate is going to be 18% and there is going to cess is going to be ended up. Then what happened? Till 22nd September, no power company purchased coal till 22nd September. So we make a mathematical calculation of it. So you can see on my screen, in the old regime, on the 2000 rupees coal price, the GST was being charged 100 rupees and cess fixed rate of 400 rupees was being charged. So total collection was 500 rupees. Now, effective 22nd September, there was a 18% GST. So 360 rupees. Now the power companies hold up the purchasings of this kind of coal where the price was 2000 rupees and they eventually saved 140 rupees per metric ton as we compare to the previous regime GST 1.0. So there could you could see the benefit of 140 rupees in my tabular format, isn't it? So like this, the coal price was 2500, so there was a benefit of 75 rupees in the new regime. 3080 price per there is a break even between old regime and new regime. It is not the income tax old regime or new regime I am discussing. Some might get confused with the old regime and new regime with the income tax, but I have used this word old GST reforms and the 2.0 GST reforms I am talking about. So if the coal rate is 5,000 rupees basis the how much carbon content is there in the coal, then eventually the old GST the total pricing was 650 rupees, and in the new regime the price was 900 rupees, and thereby the new regime seems to be practically much expensive, and the costing is increasing for the in the new regime. So basically when we see this particular tabular format, then you could see that how it is impacting every dealer at different point price. Now you see that the saving is there, but the power companies did not, for the whole September after the GST council meeting happened, the for next 15-20 days there were no purchasing. The traders had to bear that loss of 400 rupees per metric ton. What happened? Power companies was not purchasing coal from the this coal traders, and they said that we will purchase after 22nd September when you will levy GST 18% on the invoice, so that they can utilize credit of 18% subsequently. Now what happened? Coal traders which were having already the inventory of 30 days, 60 days with them, the cess credit was lying with them, and it became a loss for the traders. So traders had a huge losses. As of now, traders are bearing huge losses of compensation cess, and they are writing to the ministry in the form of representation for making this convertible into the GST credit, bring out the transitional provisions. But until and unless it is discussed in the council meeting, the law is that that become the loss for all the traders basically. So now you see the contractual arrangements that were made. No discussion was there as such key taxes shall be borne by the buyer or not. There may be a clause. If there is a clause, then eventually companies can go to the courts and get the benefit. The coal traders may make recover the tax loss from the power companies, but that totally depends upon the legal perspective, that how the agreements have been drafted and in what way they have been executed, and the mutual agreement between both the parties. So that is very important. Next thing is they should come into the renegotiation part also. In any case, their traders are bearing huge losses, then they may come up with the renegotiation strategies with the power companies, or maybe coal, maybe the automobile sector. They can come up with these kind of arrangements wherein they could see that if there is a possibility to for reduction of the losses or not. So 400 rupees cess, it becomes a dead cost, having no cess output liability, uh, effective from 22nd September 2025. So it is going to be a huge loss. I think in the all the industries taken together, if the loss is going to be, I think more than 5,000 crores or something, then it is going to be a huge loss per se. So the advisors had given options that liquidate your inventory before 22nd September, but at the same time there was no consumer per se. Consumers were also conscious that if If we purchase the item having cess, then post 22nd September there will be no output cess. What will we do with the cess? This problem came. If we talk about manufacturer, if we talk about manufacturer or the textile industry, for example, then in Gujarat, in Surat particularly, the companies are having purchasing coal in the boilers, in the plant boilers. So they were purchasing coal and they were reversing the ITC because there is no output liability on the textile. Textile was having, let's say, 5% rate on the fabric. So there was no, so cess was becoming a cost, uh, even if for the that type of manufacturers. Now, in the new regime, they are purchasing coal at 18% GST. Now they can get the GST credit of 18%. Now it is a boon for the, it is a miracle, or it is a very incentive position for the textile industry. Now 400 rupees per metric ton is no more costing for them. So eventually their costing will come down. So if we do the industry analysis, then due to compensations, as various industries have been benefited. Various industries uh, are lying the loss of the compensations as credit. So it is the industry to industry analysis that we need to see which industry has been benefited, which not. So perhaps which industry you are dealing with, you need to know, you need to read out the provisions, you need to see that how my industry is going to be benefited. Talk to the, give the advisory to the entrepreneurs that this is how the benefit is going to be passed. And there was an inverted duty structure also in the textile. Previously, the cess was becoming cost and no refund was there. Now you are buying input coal as an input of 18%. You can eventually claim the refund also in the inverted duty structure refund, or in the export also. Now export, you see, input and input service refund is available, so you can probably get refund of the coal also 18% GST. So the in that way industry is benefiting so much. Steel companies are benefiting, cement plants are benefiting. So you see, it is not like that key only the automobile industry, the coal sector particularly. If I talk about, then there is a huge cess credit underlying. That is the worry. But if we talk about other other things or the other industries that are in huge benefit is there, and they should pass on the benefit to the ultimate consumers per se. So, export I have already talked about. Due to the positive time, I will be skipping some of the slides. And now I talk about the 18.4 section, the legal mechanism. So, legally, if I talk about 18.4 section, it talks about, let me just open up the section 18.4. It says that where any registered person who has availed input tax credit where the goods or services supplied by him shall become wholly exempt. Wholly exempt. If it become wholly exempt, the word is exempt, then he shall pay an amount equal to the credit of the input tax in respect of the inputs held in stock, either by the credit ledger or cash ledger, whatever held in stock. So it simply says that where your supplies become exempt, like in this case, the compensation says, the notification says it becomes nil, not exempt, nil. Then why section 18.4 will be triggered? Now you come to exempt supply definition by virtue of 247 of CGST Act 2017. 247 says exempt means any supply of goods which attracts nil rate of tax or which may become wholly exempt from the tax and includes non-taxable supplies. So, nil rate of tax is also included in the definition of exempt supply. So by virtue of 18 for red with 247 and 278 non-taxable supply, 18 for is triggered, and as of now the companies wherein the output cess becomes exempt or nil, because exempt also includes nil, and the cess notification says nil rate of, uses the word nil rate of tax, then eventually you see the ITC need to be reversed. So basically, 18.4 is the section, and rule 44 is the particular rule which we should refer to. Rules tell that how to reverse. So rule says the amount determined as an output tax liability, it shall form a part of output tax liability of the person and shall be furnished in GST ITC 03. So there is a form ITC 03 wherein you need to declare that output tax liability and you need to reverse the amount. Or where the businesses are closing, then in GST 10. So you see, and in compensation cess, there is a section 11 which says that provisions of CGST Act will apply mutatis mutandis in respect of the cess leviable under section 18 of the levy. So eventually the legal, when I sum up the legal interplay of the cess and the CGST Act, then it is the same thing that I am talking about. That cess credit must be reversed because it becomes nil rate of supply. So when we discuss and when we talk about the intricacies of the cess, then you see that there were economic factors, legal factors, commercial disputes arose. Then fight is going on between the center and the companies that why our cess liability, our cess credit should be made as a loss, which is a huge number, 4,600 crore, 2,500 crore, whatever. So you see that the FADA has also given an advisory to the automobile dealers. CAs attending this webinar also might be dealing with lot of dealers of the automobiles. So they have given advice not to reverse the cess ITC as of now. Let it be remain into the cess ITC. Let the apex court decision come. So currently the matter is sub judice with the Honorable Apex Court. No one can say anything what will happen. In Safari retreat case, when 17.5 was challenged, all eyes were on the judgment. So now going forward, I think we all should wait, and probably we all should wait and see that what decision would be there. So I have just for the legal provision's sake, I have kept section 11 one of the Compensation States Act 2017. The cess act is still remaining. cess act has not ended because there is currently cess ongoing on the tobacco products, and in future there will come a notification when the union finance minister will tell as to when it should be ended. So it would come like this, but it will remain in the law itself. The cess act is going to remain as of now. The only thing I am talking about is the only cess has been made as a nil rate on certain items which are mentioned in the notification. So please try to read the notifications and the serial number per se. Don't go by the WhatsApp University ready-made, reckoners or the PPTs. Try to analyze the law in such a way that you also get analysis from the core of the issues that are arising from the changes in the GST law. And changes are coming so frequently that you can't skip any change or any notification. So the best part is you just read the notification rather than just seeing the ready reckoner or listening to the faculty, any faculty. With all due respect, we should listen to the faculties, but eventually you should also make a habit of reading law, the bare law. Then your perspective changes. Can you then become a practitioner in the appeals or the GST tribunal practice is also going to be effective for the chartered accountant. So these are the emerging areas for the chartered accountant where you can start your practice in the GST tribunal. For appearing in the GST tribunal, chartered accountants must have grip over the law, over the Bear Act, over the Custom Tariff Act. Therein you need to talk on the law part, on the facts, on the grounds. So then your grip should be very okay and very perfect on the sections itself. So my advice and the suggestion to the all the members participating in this webinar is to read and read and read. Only then can you make a sense of the professional acumen, or per se the professional kind of judgment which will be useful. Read the case laws, read the judgments that are coming, try to analyze that what kind of the interference the judgment is trying to coming up. So all those things become very important. So you see the 18.4, I have analyzed the key legal terms analyzed. It says supplied shall pay. So you know the word shall is, it's a mandatory obligation, no discretion. Wholly exempt means you need to read the exempt supply goods. Input held in stock. So you see, you need to read the law and then mark the main things, then again read the thing or definition of that particular word that is used in that section. So this is how you derive the legal acumen in yourself, and you become a great legal practitioner, or you are able to present the matters more effectively, and it becomes a success for your clients, and you are able to charge very good amount from the clients as well. And this is how you made up your practice in a good way. So this is how you evolve as a practitioner into a litigation practice per se. So this is how it is. So I have, in the slides I have talked about the rule 44 and everything. So I have also mentioned about the 5 critical takeaways, that currently there are no grandfathering protection which was given in the income tax law. There is no transitional provisions. Any time the GST department may ask from you that why you have not reversed the ITC, and it may also put the liability of interest also on the cash component per se, in case your cess ITC is not that much that is required for the output liability of the inputs held in stock. So this is what the government intention. Now you think from what should be conclusion part. Now we are coming to the conclusion part. So now you see the ultimate outcome, or the Honorable Prime Minister Modi's vision was for the reduction in the rates to give the benefit to the consumers, was to give the incentives to the businesses outright there, to make it a developed economy, which is also one of the vision for the 2047 Viksit Bharat. So I think when that was the vision for the council, to make it simplified, to make it more lucrative for the businesses, so that businesses can develop, can flourish, can economy can do well, then I think there should have been a transitional provisions. Either there should have been a provisions of refund, which ideally government would not do, but at least there should have been transitional provisions in the form of IGST credit something. Of course, they should also come up with the mechanism of states intervention, because cess was introduced just to compensate states. So the cess has already been distributed among center and states into 50-50 ratio. Now when cess will be converted into IGST, then what would be the settlement perspective? That would be a question before the council or the ministry. See, there of course there are challenges, but I think the stakeholders consultation, along with discussion, should be there for the should be there, and some clarification we may expect in the next council meeting. Because Article 300 says no person shall be deprived of his property save by the authority of law. Then if it becomes a right, then how come it should not be taken away without authority of law? Or if government has come up with any change in law, then it should follow proper legal procedure. It should not be arbitrary कि भैया आज से खत्म. So in all the frequently asked questions also, I do have the frequently asked questions. The government, in one of the frequently asked questions, government has come up that in the call that the council has recommended to end the compensation cess and the rate has been merged with the GST. So they have used the wording merged with the GST or subsumed into GST. When the frequently asked question itself says that it has been merged with GST, so how come the right can be taken away? So the constitutional question should not the benefit of the subsumption flow to the legitimate credit holders be there. So that becomes the constitutional question. Then we have judicial precedents also, wherein in the one of the case of Ishwar Motor, it was said that the moderate credit is a vested right. Lot of judgments are there. You can read out that ITC is the constitutional right. It is the property of the taxpayer. No one can take away that right. Can only be taken away through the law only. It should not be against the SSC. Lot of judgments are already there which are talking about that. So I have also put the the frequently asked questions particular portion here, and it is showing that cess has been subsumed into GST, and the cess levy and the cess rate is being merged with the GST so as to maintain the tax incident on most goods. Or here the frequently asked question is saying merged. So the government acknowledges that it has been merged, it has been subsumed. Then benefit should extend to the credit holders under Article 300A. This is my just submission, not giving any kind of legal advice or so. So we should represent the matter. Trade associations should represent the matter. Different associations across the country should give up the representations that legitimate credit should not be lost during structural reforms. So this is how the principles should be established, So this is how it should follow. Now coming forward, that credit is at risk and it is worth 55 days of inventory. I've already talked about coal sector. I have analyzed it. Then I will just go up because of the paucity of the time. I was thinking to just highlight you and give you food for thought for the intricacies in the GST compensation cess. So can you just think that this particular topic can be thought away from this perspective also. This is how the company approaches to you for a legal opinion on cess impact post GST 2.0 reforms. Then I think you can include all these things into the legal opinion and you can charge well. So I have just come up to the end of the slide. The takeaways, there are a crisis in the industry worth of crores. There is 18-4 trap. There is a mandatory credit reversal is there. No grandfathering provision, no transitional provision is there. Article 300A comes to the protection. Coal sector paradox, we studied that how the coal which is being used in various industries, which sectors are being incentivized, which sectors are facing loss post GST 2.0 reforms. Then I think a lot of things are coming up that proper legal documentation of the agreements become the very important part, wherein that is why the role of the legal advisors or the councils comes into picture. That is why the listed companies are paying so much amount to the legal advisors, that they put these clauses already into the agreement so that your right is saved when there is a change in law like this. So please understand that whenever you are even drafting an agreement, that also um, becomes very important that you put all these provisions already well in advance. So this is how it is. So the promise of GST 2.0 is the simplified rate structure, ease of doing business, long-term economic benefit. But I think the immediate challenge is the government to take certain things. We believe that it was a big exercise, and of course, government has done a lot for the stakeholders. But eventually, these challenges also should be looked into going forward. And in the next GST Council meeting may happen in December or January or before the budget, we can expect, of course, because no GST benefit can come up without council approval. So I think council will meet once in December or January before budget, and of course they will notify the changes in the along with the budget, and then the notifications will come. So the industry bodies, professionals, taxpayers should represent to the government. So the clock is ticking towards 57th GST council meeting, and the results of 56th council meeting, we cannot analyze that the whether this practice has uh, actually made a significant economic of upward revision, or maybe neutral, or whatever. The results will determine whether the this historic 2.0 reforms becomes a model for the world, or will help in develop for the Indian economy to be developed economy, or it will be a cautionary tale about managing complex transitional provisions with respect to cess component only. So with having said this, given the time frame, I just thank all the participants and the CPE committee for having me here, and the patient hearing. Thanks to all participants. I think I was able to give you certain insights of the on the CIS part, and I'm ready for now open questions and discussions, if any. But I should give a clear disclaimer that whatever provisions, information I just shared, these are my views and do not constitute any legal advice. Readers should consult with, should read the laws, or should consult with the qualified advisors, the professionals, before relying upon this PPT. So please refer to all the sections, and for official judgments to the CBIC for any clarification regarding the cess credit treatment. So these were my views. So I just thought it to give a clear disclaimer at the end that one should not take it as a legal advice. So this is all from my side, and now over to the moderator of the CP committee of this webinar. Thank you so much. Thank you, everyone.
Thank you, Shiva sir. There are some questions from one question is from S. Srinivasan from Dindigul. Cess is collected from buyers only. So what is the loss to the dealers?
Can you repeat?
Cess is collected from the buyers only. So what is the loss to the dealers?
So 22nd September, the cess has been ended. So once it is ended, you can't collect cess post 22nd September. So once you can't collect cess, then I think it becomes a loss, na? Why it
Yes.
will be collected from the buyer? So this is the answer to this.
And whether it will be added back to the cost of the goods?
Yes, of course. Even in the manufacturing sector, I have talked about where there is no output cess liability, it becomes the cost.
Right. And one more question, sir. What is your take on compensation cess be merged with SGST being a compensation to states, and why it was not being merged with SGST?
So one probable reason why it was not merged, maybe I can only give you the hint of doing it, because cess was already distributed to the states to compensate the states from the losses, that revenue losses that states occurred. Now when the cess has already been distributed, government is giving government, if is transitioning into GST credit, then how the payment settlement mechanism will happen? for discharge of output liability. That becomes number one challenge for the government. Number two, when it becomes a transition to the GST credit, then also government needs to do certain legal or constitutional change. Though I think that the government may have observed it, deeply examined it, this issue, and did not make it happen. Once the minutes of the meeting will be out, then we will be better be in a position to analyze that why it was not done so.
Okay. Thanks a lot. So, with concluding the webinar, I am sure that all the members will have gained a lot from the deliberation of both our eminent speaker on labor codes and intricacies on compensation cess after GST 2.0 reforms. Once again, thanks to our both eminent speakers, CP committee, chairman and vice chairman, CP committee, technical team for arranging the CP webinar on latest and practical topics, sparking in members today's scenario of practices. Thanks, sir.
Thank you.
Recording stopped.